Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading.solutions.com for a Friday. What's today? February 24th. Hope everybody's doing well. Lots of chop, right? Very choppy market. Let's get into that. Yeah, it's been especially for, as I mentioned, I had a class yesterday talking about longer term trades and so forth. So it's been a bit of a challenge for for day traders because it's just been back and forth, lots of swings back and forth. Today we were in after the initial sell-off in the S&P due to the again persistent inflation numbers. We basically spent all day in about a 46 on the low, 39.46 ish to about 39.80, so about 35-point range today. It's interesting because again, talking to having our sessions this morning, again, everybody tends to, every time we get a sell-off, like we did this morning and even yesterday, what is tending to happen is everybody kind of rushes in trying to sell the breaks, and then the market runs right back. Like if you were trading yesterday, the best trade would have been to wait for that bounce back up to the highs of the day and then sell it. And then coming into today, you had a big sell-off as a result of the hot inflation number again today, and then pretty much get no follow through. So that's really where we're at. Technically, where it's just a mess. I would say we still, all in all, kind of hovering between. We had that range between 4K and 4,100. Now it looks like we're establishing a new range, possibly around the 40-30 area down to, I can see us going all the way down to 39K, but in a very, very choppy manner. So, and really what's hurting a lot of traders, and unless you're, again, very nimble, is the lack of follow through, right? So like this morning, it looked like we were having some really nice momentum, and then all of a sudden it stalls, similar to Thursday. So that's kind of where we're at on the indexes. Just to give you some numbers here, if you pull up your charts, everybody, what I would look at is we're looking at maybe another short entry in the S&P, back up where we broke down from 40.80. We had a nice short, as I mentioned in Tuesday's YouTube. We covered that. Clearly left a lot of money on the table because we covered that at 40.30, and obviously we went down as low as 30.46. But in the interim, there was a bunch of chop. So if we do rally, clearly yesterday's kind of messy, choppy area is going to be a level of resistance, not 40.10 to 40.30, and then we are coming into some lower levels around the 39K area. So that's really on the S&P. That's what I would be focused on. NASDAQ also. With interest rates falling, we really don't have anything on the NASDAQ. Similarly, we got 12,400 as a new distribution, new supply area, and then down to about 11,800 would be the next area of accumulation I'd be interested in. But again, similar to all the markets right now, just lots of chop. As well. Dow also coming into some interesting levels around 32,500. That's been also very choppy along the same lines. So 32,500. If you look at that, you'll see some areas there that might be of interest. And then on the supply side, where we broke down from around 33,100. I would look at those areas as well. Okay. So, yeah. And then the small caps really, in terms of relative strength, small caps are actually holding up relatively better, I would say, because they're not getting hit by the strong dollar, not as interest rate sensitive. They're actually more sensitive to an economic slowdown, which clearly is not happening with all these inflation numbers and so forth. So, anyways, yeah, very, very choppy trading. I think next week we've got more earnings, more retail. We got Target, we've got so we've got some big retailers again next week. That'll be interesting. But all in all, very, very tough environment in terms of just getting any kind of traction, any kind of momentum at the moment. That hopefully will change next week. One of the things that is opening up some opportunities. We had a big sell-off, and we continue to sell off. We had rollover in the bond market that kind of skewed all the charts. We had a big kind of rollover gap. If you're watching the bond markets, the 10-year had a big rollover gap, and so that kind of skews the charts because that old level at 11, 110.23. Now that's just a rollover gap. So I still want to keep those same levels. 11 is it 110.23 and a half to 110.09 is a really nice. We've already had a nice actually came up a little bit shy. So we are coming in some really decent areas on the 10-year. But if you're using the adjusted charts, they are a little bit tricky right now. Same with a lot of the grain markets and so forth. So that's really all there is on the bond market. And again, kind of the same thing. We continue under pressure. And again, if we break to a new low in the 10-year, then I would suspect we are probably, that's going to pressure stocks. So the fact that if you looked at the 10-year, we actually got a bounce towards the latter part of the day. And I think that is actually helping. I think that, that's why the stocks really didn't fall off the cliff at the end of the day, which a lot of people were expecting as well. So that's kind of where we're at on that. What is picking up again, just the correlation. We talk about this all the time. The correlation, the inverse correlation between interest rate, when rates go up, it's almost like, well, it's kind of interesting the way you think about it. So bonds going down, stocks going down because rates are going up, but that in fact also is a positive for the dollar. So if you look at the dollar index continues to strengthen up because rates keep rising and stocks kind of falling. So, and more importantly, the dollar rally has produced or is beginning to produce some really nice opportunities in the opposing markets, i.e., we've been short silver with some puts, SLV. Okay. So that's finally starting to kick in for us. We are trying to buy the copper in particular. That's one market. We have a setup on the copper market that may hit over the weekend right around that $4 mark that we've been talking about. So we did, it did roll over. So a lot of contract rollover this week too. I think that's I think that's also what's causing a lot of the kind of choppy trading, like nat gas, for instance, rolled over, which caused some nice rally in that. We'll get into that in a minute. But in any event, the dollar surge is now finally breaking a lot of these currencies out of these major ranges, right? So if you take a look at the Kiwi finally broke. It's been in a range here for 62 to 62.50. That broke down. Okay. And that's great news because now we can actually start looking at either some shorts on a bounce back to where the market broke down, or if we have a further strength in the dollar up into the next resistance, which is coming in around 105.63, that would actually set up for some longs in some of these currencies. So that's actually good news for us as traders because we've been in this chop here. I mean, if you look at the Kiwi, Look at the British pound. The British pound is still kind of challenged, still kind of, but the Kiwi's not breaking out. The Swissy, been talking to this with my members. It's been in a mess here for almost 2 months, right? If you look at the Swissy, 181 up to about 110. We're finally breaking to the lows, and we have some really clean levels coming up on the Swissy down around the 104, 20, 50 area. So that's a positive. Also the Aussie also breaking down, finally breaking out of these ranges. So a lot of these currencies, because of the dollar strength, are producing some or are coming up, opening up some opportunities for us. So that's kind of exciting because we've been in this chop in a lot of these currencies for so long that the dollar is actually, the dollar movement is finally getting some of this stuff. Even the yen had been range trading for about 3 weeks now. That broke down, got some levels coming in as well on the yen, the Canada, the peso, all of these markets now. Canada actually finally coming into some levels as well. So if you haven't been looking at currencies or you've been getting chopped up in currencies, the dollar strength here recently is actually a positive. It should be welcome because, again, now that we have that strength in the dollar, it's actually opening up some opportunities to go into the currency markets, which had pretty much been challenged literally for the last couple of months, right? I mean, you know what I'm talking about. I mean, these currencies have been very, very choppy and just coiling up, but we finally get getting some breaks in there. Okay. Similarly, the silver I mentioned. So we are in SLV. We did a strangle on this one. Finally starting to pan out. On also very similar, it had been range trading for a little bit, and we are coming into some really decent levels around the $20 mark on silver. Okay, so check that out. You can see that on your charts if you go out to your daily and 8, 4-hour charts on silver. You can see the opportunity. So those are pretty good. Copper, as I mentioned, we broke down from about 390. We were range trading. That's an opportunity we're looking at TTS. Okay. And then on the nat gas, I'm going to address that. So we did add to our boil position after I think I mentioned this the other day. It went to 2, rallied away from 2. We were long. We actually didn't get, we didn't stop out. And in fact, now that it looks like possibly nat gas has made a low, we added to our position yesterday and reduced our cost basis for the boil. And so now we're increased our position. And I haven't really I do that on stocks and sometimes on futures. Haven't really expressed that, but we're starting to do that now. Kind of building positions around levels and stuff. And I actually never. One of the things that a lot of people tend to do is they tend to add to something that's moving up. Let's say if you're long, I actually do the opposite. I try to dollar cost average to reduce the cost of So if you bought a stock at 40 and you add more at 35 and 30 with an ultimate stop, obviously you still have to stop out if the thing doesn't work. But what what you do is you start the position. Let's say it's a quarter. Let's say you're going to do 1,000 shares. You do quarter size increments as a stock builds around levels. And then clearly, if it didn't work, then you stop out of the whole thing. But when it does take off in the right direction, you've got a pretty nice size position. And so that's kind of what we're doing with Boyle, right? Now on the futures in the nat gas, we need to get beyond our first level. If you look at your charts of nat gas, 261. You can see there's a very clear. We actually spent the early part of February going sideways there. We bumped up against that about 3 times and then finally broke down. So one of the things that prompted me to add to the Boyle position is when we regained. Notice how we were raging sideways, trading sideways to with a low at like 239, 240 on the futures contract. Notice how we broke down and then finally, went below 2. We regained that, and that's actually what prompted me to go back in and add to our position, because I think that was actually kind of a confirmation. Again, you never know for sure in this business anything, but that kind of added some confidence to the fact that possibly, and again, the odds had increased that possibly make a new that may have been the low. No, we don't know for sure, right? We could just fall right back down and fall below 2 again, but right now it looks pretty good. In fact, we closed right near the highs today, so we'll have to see what goes on. So we are long Boyle with a much lower cost basis now than we added initially. It's still a relatively small position, but because it is pretty volatile, and I expect that if we go to at least like 5 or 6 as my target, we're buying it around the the $6 to $7 range if you're looking at Boyle, and that should trade up to in the 30s to 40s if you look at the chart. I think when I did the class yesterday, I kind of went through that. So look at the charts of Boyle and Cold, KOLD, and you'll see what I'm talking about. Okay. All right. Lastly, grains also taking some heat from the dollar. So the dollar strength is also pressuring the grain markets. We did take a stop out this morning, really small position in wheat. So in full transparency, that was a really tiny position. I think we ended up losing like $120 or something. So I did that purposely because obviously it's aggressive trade in this environment. So I am keeping size small on futures, just especially when you're still inside a lot of these ranges. So that didn't work out for us. Looks like wheat now is headed down below 7. And again, I think it's a lot of this is the dollar. So we are coming into some really critical levels in wheat around $7. If we break down through that, I think we go much lower. But I think the dollar is actually a major factor here, right? So we'll see what happens there. And again, we had contract rollover on all the grains. So that also kind of skews the charts a little bit. We went from March, a lot of these corn, wheat, and soybeans went from the March contract to the May contracts. And so oftentimes what happens with those, and then the corn went to the J contract, I believe. No, they're all May contracts now. So that, again, if you're the various types of charting that you use, because remember what happens with rollover is like for instance, let's say wheat, the March contract as of yesterday drops off, and then the May contract starts printing on the charts. And if there's a big disparity between the two, then you have a situation where there's a big gap, like we had a rollover gap. But if effectively what happens is those levels now that you see on the left side of the chart are actually still the levels on the March, which is really, I don't know if you guys ever knew that when you're doing the continuous charts rather than the contract specific charts. So maybe I'll do a class on that. Okay. So at the end of the day, looks like, soybeans, you notice all the grains were under pressure today, especially corn. And a lot of that has to do with the dollar strength. So if you're wondering what the heck happened to all the grain markets, especially, and this is, look at corn, how it was range trading. Remember, I've been talking about how corn, and similar to all the currencies. The nice thing about what's happening with corn is now we're opening up some really nice opportunities, either to go short up around the 660 area, or to down around 629. There's some really nice levels coming out of these ranges now. So next week is going to be chock full of opportunities that we haven't seen before in all the dollar kind of related markets, right? So the dollar strength, again, as I mentioned earlier, is something that is welcome in respect to that. Okay. All right, everybody. I'm going to get out of here. So again, if you want to spend 5 days and look at these levels with me, sign up on the bottom there. I'll give you a free 5 days just in the morning sessions. If you want to sign up for the newsletter, I will have a class in about 2 weeks. I did a class yesterday. It went well, long-term type of stuff. So I will be holding these classes probably at least twice a month. If you have any topics that you want me to cover on the free classes, go ahead and ping me at support@transparenttrading-solutions.com. If you have any requests for an upcoming class or whatever, one of those free classes I do on a Thursday, typically on a Tuesday or a Thursday evening, go ahead and ping me on that. Okay, my support staff will get it to me. Other than that, challenging means you got to reduce your size. You got to super nimble. But I think, what typically happens in markets when you get a lot of the chop, and as we see with a lot of these currencies, they're opening up, coming out of a lot of these tight ranges. And that's where the opportunity is. So you got to keep your powder dry and wait for those opportunities to come. And when they do, you're ready to go instead of getting all chopped up when opportunity is not there. Okay. So anyways, have a great weekend, everybody. And I will see you next Tuesday. Okay. Take care, everybody.